Okay, so just a quick background to Cluff Natural Resources. We are an oil and gas investing company, primary focus on the UK North Sea, on exploration and appraisal, which is where we see the most amount of value being potentially created in the value curve. We have 7 licenses spread across the southern and central North Sea, both for oil and gas. This has been a relatively transformational year for the company. Earlier in the year, we farmed out 2 of our licenses to Shell. Previously, we were awarded an additional 6 licenses in the last year's licensing round. And as Nigel just mentioned, we've recently completed a fairly substantial equity raise, which means that we are fully funded for our share of those 2 wells with Shell. So we're very excited about that, and we're fully funded for the foreseeable future. Total portfolio amounts to just over 2.4 TCF of gas. So in oil terms, that's the equivalent of about 400 million barrels of oil. And we're also looking to grow that portfolio in the next licensing round, which is due to open up literally within the next couple of weeks. Just in terms of board, Mark Lappin has recently joined our board as chairman. Mark's got a huge amount of experience in the oil and gas industry, most recently with Cordrilla and Centrica, but he's worked for a number of sort of major oil and gas companies, including Phillips and Exxon, and brings a huge amount of experience to the board. The other key executive is Andrew Nunn, who's our Chief Operating Officer, geologist, and who leads our technical team, and he's responsible for identifying all of the overlooked and less well understood prospects, which we've successfully brought forward over the last few years. Just following on from our recent raise, we've really transformed our share register. Previously, it was almost entirely sort of retail. We brought in a number of key institutions as a result of that raise. Canaccord now being our largest shareholder, followed by IPGL, which is Michael Spencer's investment vehicle. That should actually be 16.8%, following his participation in the last fundraising. Lombard Odier with 8.1, Henderson 6.2, and after that Fisk and James Caird Asset Management, all of whom have supported us over a long period of time, and most recently in that raise. So very strongly backed now. So why focus on gas, and in particular the UK, which is our primary focus? We believe that this is of strategic importance to the UK. It's a proven gas basin which extends from the northeast of England right through to the Dutch sector. The UK is facing a fairly major gas crisis, in our opinion. It was only a decade ago that we were entirely self-sufficient in gas. Now we are importing more than 50% of our gas, and by 2034, that's going to be 75% of our gas requirements are going to be imported, which creates a fairly major issue for the country as a whole, and something which we believe will need to be addressed. As far as the basin and the UK as a whole is concerned, the industry has restructured itself quite dramatically. We're now in an environment where, obviously, with higher and more stable commodity prices, coupled with a restructuring of the industry, with costs having come down quite dramatically, and a far more attractive regulatory and fiscal regime, mean that the North Sea is an extremely attractive place to be drilling now. And on that basis, we believe there's no better time to be drilling in the UK than now. So just a quick overview as to where we operate. Until recently, we were confined to what we call our core area of the southern North Sea, which is in the middle area there. Our licenses are in the blue. But as a result of the success that we achieved in last year's licensing round, we've expanded the portfolio to the south. We picked up a couple of additional licenses in the southern North Sea, but also to the north up into the central North Sea, where we picked up a couple of licenses. And what that's also done is added an element of oil prospectivity to our portfolio, which we'll come on to later. So southern North Sea, this is what we call our key and sort of core area, and this is where the majority of the prospectivity lies. Our licenses there again in the blue, but you can see all the red splodges on that are the existing, discovered and producing gas fields. So you can see it's in a very much established play fairway. Say this is where the majority of our resource sits. So say the majority of that 2.4 TCF of gas, or equivalent of 400 million barrels of oil equivalent, are located. There's still a huge amount of prospectivity in this area, and we're focusing on sort of the relatively underexplored areas where we see significant upside. It's all relatively shallow water, so jack-up rig territory, which is much cheaper, and a significant amount of existing infrastructure in this area, which means that things can be brought online and commercialized relatively quickly and straightforwardly. So moving on to the first of the farm-outs and the first well that we anticipate drilling with Shell. You can see on this map where that star is. That is the Selene prospect, and you can see why this has been of particular interest to Shell. All those red squares are existing fields and infrastructure, which is operated by Shell as a joint venture with Exxon. And all of that feeds into the Bacton terminal, which you can see there in Norfolk. So, having kind of neglected this area of the North Sea through the downturn, Shell is very much focused on investing back into this infrastructure. They've invested heavily in Bacton and are now looking for additional fields to get further supply into that system, where it has significant capacity. We're particularly proud of this. This is the first farm out that Shell has done in the southern North Sea in the best part of about 10 years. And we don't necessarily anticipate them stopping here, but we're very, very excited and proud about that. In terms of the prospect itself, it's just under 300 BCF of gas associated with it. Terms of the farm out are such that Shell are taking a 50% stake in this license, and in return for that, they're paying us $600,000 of cash up front, and they're also going to be paying 75% of the costs of the first well, up to a total of $25 million. So a significant carry on that well, and we're fully funded for our share of the costs on that. But in effect, Shell are paying for half of our costs on that. We're currently working with Shell to get to that well investment decision, and if we can get that secured in the second half of this year, then we could be drilling that well in the second half of next year. So the second of the two farm-outs with Shell is in relation to our license 2252, which includes the Pensacola prospect. This is a Zechstein Reef play, which is slightly different to the geology associated with the Selene prospect. In terms of size, it's not dissimilar, just over 300 BCF of gas. So on a net basis, just under 100 BCF to Cluff. The terms of this farm are such that Shell are going to pay 100% of the costs of a work program through to the earlier of the end of next year, or the point at which a well investment decision is made. And that work program is going to involve the shooting of new 3D seismic over that prospect. That's going to be new 3D broadband 3D seismic, which has already been contracted. We know that seismic is going to be shot in the second half of August this year. This is a slightly shallower play. Well costs associated with this well are in the region of $13 to $18 million. So we will be retaining a 30% stake in that. And again, as a result of our recent raise, we're now fully funded for that, and fully anticipate that a well will be drilled on this license the year after next. This slide really just gives an indication of the level of interest and activity that's going on in our area. I don't propose to go into detail on this, but we've seen a number of major players investing heavily in this area in the last few years, in particular Ineos, Spirit, and Neptune have all invested heavily at a corporate level. And the sort of light green boxes indicate a number of key wells that are going to be drilled in the course of this year in acreage, which is adjacent to ours. Perhaps just to put things in perspective, there were only 8 exploration wells drilled in the whole of the UK side of the North Sea last year. So it's very encouraging to see at least 4 wells being drilled in our core area, and success in any one of these wells will be a very strong read across for our prospectivity. Already we've had, just in the last month, Rebold drilling their well at West Newton, which discovered gas. So already a very positive and strong read across for us in the basin. It's a similar play. So this is the third of the prospects which we anticipate being drilled over the next couple of years. This is our license 2352, which includes the Dewar prospect, which you can see in orange in the middle of that map there. This was a license that was awarded to us just last year in the 30th licensing round. We hold it 100%, and we have done a significant amount of technical work on this license, which has significantly enhanced our understanding of the prospectivity, the volumes, and risking of this license. We hold it for a 4-year period, and what's of particular interest here is just in terms of offtake and potential farm outs is its very close proximity to BP's ETAP infrastructure, which is just immediately to the west, but also a number of other fields which are being developed. Culzean, which is being developed by Total, Merganser, which is Shell-operated infrastructure, and we've also got the Seagull field, which is currently being developed by Neptune. So a significant amount of work and activity in this area, which provides offtake opportunities for the company, and also natural farm out partners. So we have just commenced a farm out process on that license, and we're very excited about the prospects associated with that. Just a little bit further detail on the geology. It's 40 sandstone. It's a relatively straightforward play, unlike some of the more expensive HPHT type plays that we see in this area. In terms of the prospect size, we've got a P9 to P10 range of just over 10 to 80 million barrels, and a P50 recoverable of just under 40 million barrels. We've also just completed an economic study on this, which is demonstrating very favourable economics, with post-tax NPV of £555 million sterling. Chances of success are 41%, so relatively low risk for exploration, and that, coupled with the seismic data that we have full coverage over, means that we believe that this is very much drill ready, and we're very excited about the prospects for this and the farm out process that we're just commencing at the moment. And then I suppose the final 2 prospects which we have in our portfolio in the core area are the Cortez and Burbank prospects on license 2424 and Cupertino on 2428. We're currently undergoing a reprocessing exercise on each of those 2 licenses, and we anticipate commencing a farm out process on both of those licenses around about the turn of the year. Again, much of the drilling activity that we're seeing in the southern North Sea is in adjacent areas. Spirit and Juan Diaz are going to be drilling the Andromeda and Darrick and Aurora wells, And as I mentioned, if a successful outcome of any of those wells will be of very significant value to our company in terms of the read across. I guess finally, just whilst it's been a very productive and transformational year to date, we've achieved an awful lot. We believe there is significant activity and catalyst for the company and in particular the value of the company going forward, both in terms of near term and long term. I guess in order of importance, we've got the Selene well, where we are currently working with Shell to get to a well investment decision, and if we can get that done by, or certainly in the second half of this year, that well could be drilled in the second half of next year. On Pensacola, the seismic is going to be acquired and shot over that prospect in the course of this summer. And following a period of processing and evaluation, we should be in a position to make that contingent well commitment firm in the course of next year, and a well to be drilled the following year. We just mentioned Dura. We've completed all of the work in relation to that, and are now we'll now be running that farm out process over the second half of this year. And I say we're very excited about that. If we can get a successful outcome on that, before the end of the year, again, a well could be drilled on that license as soon as the end of next year. And we've just mentioned Cupertino and Cortez, which will be the next two licenses off the block in terms of farm out process. And I guess in the background to all of that, we've got the 32nd licensing round, which is due to be opening up any time in the next couple of weeks. And we will certainly be looking to replicate the success that we had in the last licensing round, where we picked up 6 additional licenses in this licensing round as part of our plan to grow and diversify our portfolio and create multiple drilling opportunities going forward. So I guess just to sum up, the partnership with Shell has been really transformational for us and a major endorsement of the company and the technical team's ability to identify and work up less well understood or overlooked opportunities, and we've really been able to take advantage of the work that they have done as we've come out of the downturn. We've got these 2 farm outs with Shell, which gives a line of sight over the drilling of at least 2 wells, and as a result of our funding, we're fully funded for our share of the costs associated with those. We do still have the opportunity we've still got fairly significant equity stakes in those licenses, and the majority of our other licenses are held 100%, so we've got significant flexibility from which to farm down. And as I mentioned, we'll be looking to significantly expand and grow the portfolio and further de-risk the portfolio, creating the farm out and drilling opportunities of the future through the next licensing round. The company remains debt-free, relatively agile, low cost. We maintain very strict cost discipline, and we're operating in what we consider to be a very attractive regulatory and fiscal regime. So, in summary, we believe this is a great time to be drilling in the North Sea. There's plenty of life left yet in the basin, and we're looking to continue to grow the company through partnership and ultimately through exploration success. Thank you.
So that's the first of our companies. A lot of detail there on the process and what's going on. Questions? Who wants to ask a question of Graham? There's one over here.
Thanks for the presentation. Very interesting. Your farm out with Shell and your relationship with them, they've got, I think, 70% of Selene, is that right?
They've got 70% of Pensacola, 50% of Selene.
Okay. And presumably at the moment you're talking with them, you're now funded for drilling, so you're probably having detailed discussions with them about the process?
Yes, certainly in relation to Selene. Obviously in Pensacola, we're committed to the acquisition of the new seismic, but certainly in relation to Selene, the primary focus is getting to that well investment decision so that we can start moving towards drilling.
And, I mean, Shell's a huge company and you're a minnow. How do you make sure they follow through and drill? Because sometimes they get distracted and, you might become a marginal interest to them. How do you make them follow through?
I mean, it's a very good question. I mean, clearly the respective difference in size is not lost on us. On the other hand, they behave very professionally and respectfully towards us. You wouldn't necessarily know or feel the kind of size difference when we have our discussions. In relation to the Selene well, we remain operator until such time as the well investment decision is made. So we are, to some extent, in the driving seat in terms of that process. Ultimately, can we make Shell and that organisation move any faster or slower than it would do otherwise? That is a very good question. But one thing we do know is that they are very much committed now to the basin, and particularly the southern North Sea, and in particular the Selene prospect, given its implications for the existing infrastructure that they have. The nearest field to them is the Bark field, which is coming off production quite rapidly. So they need to get more supply into that system and that infrastructure. And also, to some extent, it delays decommissioning liabilities for them. So there are very strong strategic, economic and commercial drivers for them to drill that well as soon as possible.
Okay, thank you.
More questions? One just here.
Thanks. Given Shell's interest in the southern North Sea and your technical expertise in finding exploration blocks in licensing rounds, can you see them working with you on future license round applications?
Yes, absolutely. And we're already talking to them about that prospect and that possibility. Shell, despite their size and might and also technical capability, have not invested heavily in exploration. You can even see that in their most recent results, where they point to reserves replacement as being a major area that they need to address. They've seen what our team is capable of in terms of, say, identifying and uncovering and progressing prospects which have previously been overlooked or less well understood. And I think they recognise that capability that we have. So to that end, we're already talking to them about the possibility of collaborating in the next licensing round. And at the same time, we're also, where we believe there's competitive advantage to do so, we are also talking to, and will also talk to other operators in the area. We have one of our licenses. We're partnered with Parkmead. Clearly, there are a number of other major players in the area, and where we believe there is a advantage to be gained from partnering rather than going 100% ourselves, then we will do.
Can you just say a little bit more about your style as a company and your own as chief? Because with all these projects, you're in the hands of geologists, all kinds of people saying this is going to be fantastic and this has been overlooked. I know you were in restructuring in the past. So how do you make it happen for shareholders? How do you sort of move out of something that isn't working and then capitalise with this low-cost way of working to actually deliver for investors?
Yeah. Well, I mean, there's a lot of trust involved. I've got complete faith in the technical team who have done a fantastic job. Yes, of course, we've had to be patient through the downturn, and there were times when you might have thought, well, is any of this necessarily going to come to fruition? But we've remained patient. We continue to invest carefully through the downturn. And I always believed that we would come good in the end, and we've seen that now. Naturally, exploration is one of the first things to go for major companies through the downturn, and for small companies like ourselves who have continued to invest through that downturn, we've now been able to put ourselves in a position where we're able to capitalise on the change in market conditions and the work that we've done over the last few years. Certainly, attracting the likes of Shell, a world-class partner, has been a key part of that. And again, we're looking to build on that. And the team as a whole, we've had to maintain very strict cost discipline as an exploration company through the downturn. But say that's beginning to pay dividends now.
Okay, time for one more question, I think. Over there.
This is a quick question on the Pensacola one.
Yeah.
And in relation to your I think you're looking to do a tieback or access another pipeline to the T side.
Yes.
Gas processing. What's the timetable for that?
Well, I mean, the timetable will ultimately flow from the well investment decision. You're right. Certainly, this is an area where Shell doesn't have existing infrastructure. So we would be looking at either a tieback to the INEOS-operated Brea infrastructure, or equally we could pipe it straight to the shore from that field. So we do have multiple options, and those will be addressed through that well planning phase, and at the point where a well has been drilled. But there are multiple options there, and we just need to work through what we believe will be the most commercially sensible route for us.
Okay, thank you very much, Graham.
Thank you.